This is CNBC's live blog covering Asia-Pacific markets. Asia-Pacific markets were set to open mixed as investors await a slew of inflation reports from the region. Singapore and Malaysia will release their February inflation reports on Monday, while Australia's inflation numbers will be out on Wednesday. Tokyo's inflation numbers are due Friday. The capital's inflation numbers are widely seen as a leading indicator of nationwide trends. In Australia, the S&P/ASX 200 was up 0.64%, rebounding from Friday's losses. Japan's Nikkei 225 was set to fall after climbing on Friday, with the futures contract in Chicago at 40,530 and its counterpart in Osaka at 40,500 against the index's last close of 40,888.43. Futures for Hong Kong's Hang Seng Index stood at 16,515, pointing to a slightly stronger open compared with the HSI's last close of 16,499.47. On Friday in the U.S., the Dow Jones Industrial Average retreated by over 300 points, or 0.77%, after back-to-back sessions where the index set all-time records. The S&P 500 fell 0.14%. However, the Nasdaq Composite continued its rally, adding 0.16% to close at 16,428.82 for another record. It's a digestion period after a really strong week, said Truist's co-chief investment officer Keith Lerner of Friday's moves. Our view is that the overall trend is still positive for the market, especially when you see this breakout of new highs, on track for your fifth consecutive month of gains. CNBC's Samantha Subin and Lisa Kailai Han contributed to this report. Markets are red hot, and investors might be wondering what they can buy right now. On top of that, some are calling for investors to move out of cash if rates do fall. If you had a spare $1 million to invest right now, what should you buy? CNBC Pro asked fund managers and wealth advisors how they would allocate their portfolios with that money. Recommendations range from tech to AI's power needs, and a stock portfolio for the moderately aggressive investor. CNBC Pro subscribers can read more here. Markets are still red hot even after a very good 2023, when the S&P 500 soared around 24%. The S&P 500 is up around 10% year-to-date, and in fact hit new record highs in March. Many stocks have soared and even beaten the broader market, but is there still room for some companies to run? Using FactSet, CNBC Pro screened the S&P 500 and the Vanguard FTSE All-World ex-US ETF for stocks that are beating the market so far this year, and that analysts love. Just 5 stocks turned up from the S&P 500 screen. CNBC Pro subscribers can read more here. Markets cheered this week's Federal Reserve decision to leave interest rate unchanged, and maintain expectations for 3 cuts this year despite a recent spate of hot inflation reports. But the market may be getting ahead of itself, according to Investnet's Dana Doria. The market is getting a little overexcited, said the co-chief investment officer.